Hello everyone, welcome to my YouTube channel. My name is André Cardoso. Thank you very much for being here. It's always a pleasure for me to share my point of views inside the market, and I want to share with you some of those patterns that the market tends to form. So this is kind of an update for my previous videos. Some of you are already familiar with those patterns and the market environment at this point. So I just want to go into a fast update to those charts, and I update some of those fractal levels already, so I want to share those with you. So let's start with the cable. I projected before this potential shark pattern at the weekly fractal, so let's see if the market will actually reach those levels. I believe that the market may feel some pressure as soon as the price approaches these levels. Obviously, do not ignore a fall below the weekly fractal, and let's observe the market conditions when the market starts to approach this level, because there is also a possibility, or let's say a probability, for the market to keep trading even lower. And if that happens, I will pay attention to the second level for the shark pattern, the 124.72 to 24% Fibonacci extension. So let's see if that happens. I have already projected this pattern last week. Let's see if the market will sink into those levels. So now the bullish bat pattern and the alt bat pattern are now invalidated for euro versus dollar, so which means it's still trading heavy, and I will not be surprised to see this 115.18 or even a few points below the 38% Fibonacci retracement being reached. So this is a retracement from the monthly fractal to the monthly resistance, and it's basically the default expectation created after a fall from this price zone. So this is the price zone for the shark pattern, actually for the crab pattern at 168 extension. The market, as I mentioned before, the market has failed just by a few points that completion point, but we keep the idea and we keep the symptom, and actually we still believe there's room to trade the default 38% Fibonacci retracement there. But we are also approaching one minor bullish crab pattern, which is the last one above, or actually the last one near the weekly fractal support. So I will not be surprised to see a small bounce from this price zone, and eventually the recovery of the euro versus dollar. But let's stay tuned on this, on that probability 115.69. So this is the golden Fibonacci extension, and it is the bullish crab pattern completion point. So moving forward, Aussie, the Australian dollar, I was expecting some more upside momentum. We are also approaching a shark pattern at 224. Actually, we need the price to confirm a violation below this weekly fractal support, and if that happens, I will pay attention to the 224% Fibonacci extension as bullish shark pattern completion point. So this is also one pattern below the weekly support. Now the Kiwi, very similar in terms of projections, and attention with projections, because they means nothing. We don't short the market just because we have projected patterns below. Actually, we wait for the pattern to form to buy this bounce from the 64.47. So this is the golden Fibonacci extension level, and we will see what will happen, but it requires a violation of this weekly fractal support positioned at 65.12. So if the market decides to trade below those levels, we may see that crab pattern formed below. We have also major targets for the Kiwi, the 38% Fibonacci retracement level. It's the same retracement between the monthly fractal support and monthly fractal resistance above, so I will not be surprised to see that happen, taking into consideration the bearish bat pattern printed above. So we have this 88% Fibonacci retracement as a bearish bat pattern completion point. The market was pushed above that completion point, and if the market decides to violate this ascending trend line support, I believe the market may sink at some point, may sink into those levels. Before that happens, obviously we have this crab pattern right below the weekly fractal, which may offer some pressure, and we will not be surprised to see a bounce and eventually a retest of this trend line, ascending trend line support. Australian dollar versus the New Zealand, very close to complete the 224% Fibonacci extension, the bullish shark pattern, so let's wait for that. If that happens, we may see a recovery or one attempt to recover some of the most recent losses, and eventually the 38% Fibonacci or the 50% as a default target for the pattern. 107.43, 200 moving average also approaching from above, so let's see if the market will search for that moving average as a default target for that pattern after completed. So CHF, let's go into a 2 hours time frame chart. I shared this potential technical double bottom, so the market has already obviously traded the default expectation or the default projection for that technical double bottom, and we have now a bearish cipher pattern projected at 92.40. So if the market decides to form the pattern, we will expect a retracement back to the most recent daily fractal resistance, which may act as support and converging with the 38% Fibonacci retracement level. So Canadian dollar, I shared this as a potential heads and shoulders. Obviously the market has already printed that potential right shoulder a few points above the initial one, and we are now heading south, so let's see if the market will violate this fractal support right there, and if that happens, we may see the price sinking into this 38% Fibonacci retracement and or eventually the 200% Fibonacci extension level as a default target for the heads and shoulders. So basically we will wait for 32.27 to be reached as a default target for the heads and shoulders, which still need validation. So we still need the price breaking below this next zone in order to confirm the fall and to confirm the pattern. Norwegian krone also trading the bearish bat pattern projected before at 88% Fibonacci retracement. So I will not be surprised to see, as I said before, a fall from this price zone. Let me correct this because I need the 38% Fib and not the 50%. This is the bat pattern. The default target for the bat pattern is a 38% Fibonacci retracement level, a minimum target. Let's say the first target for the pattern. So let's see if that will happen. We have also the 200 moving average approaching from below. Let's see if the price will search for that moving average as an element of support, an element of pressure and support. Dollar versus Mexican peso, it has found resistance just a few points below the default target for that bullish bat pattern printed below. So basically I will not be surprised to see a new highs just to hit those levels. The same way I projected that pattern, that edge and shoulders for the for the Norwegian krone. We have also one potential edge and shoulders for the Mexican peso. So that's I will not be surprised to see a fall below that fractal support, which may put the price trading the 200% Fibonacci extension, suggesting a retest or a visit to the weekly fractal support below, and eventually more downside momentum. If that happens, if the market starts to threat the weekly fractal, there's room obviously below that fractal support. Dollar versus the yen. I shared this as a potential cup and handle on my previous video. We were approaching this 200% Fibonacci level when I said eventually the market will bounce, creating that handle, and then if the market decides to violate this weekly fractal, we can start to project that pattern below. For now, and because the market has bounced and it can still trade even higher, so if that happens, we should pay attention to 105.71, 106.36. so basically we wait for the pattern to form. We expect some pressure at the golden Fibonacci retracement level, extension level, I'm sorry. We can expect a pullback. As you can see, the 38% Fibonacci retracement level from the golden Fibonacci level, the bearish shark pattern, will target if we target the 38% Fib, as I said before, the default target for the shark pattern is a 50% Fibonacci retracement level, but we have also the 38% Fib converging with these daily fractal resistance, previous structure highs. So violating above, trading above this level will increase the probability to form those patterns above, and if as soon as the price approaches these levels, we should pay attention to a small or even if limited retracement pullback to the daily fractal resistance. The euro versus the yen, it has completed the bullish crab pattern and the bullish butterfly pattern. As I said before, we were approaching this price zone on last week when I shared the potential to form that pattern and for a bounce towards the 38% Fibonacci retracement level. So this pattern also suggesting a visit or a retest of the monthly fractal resistance, so position at 102.87. so let's see if the market will react accordingly to that same expectation for euro versus the yen. The pound versus yen, it may bounce from here. We have also kind of a potential heads and shoulders here. It still needs a confirmation above above the neck zone. Let's call this a neck zone, above the most recent fractal resistance position at 135.80. so if the market decides to violate above this structure resistance, I believe the market may trade even higher from here, but we have patterns projected below. So at this point, I will not be surprised to see the pound versus the yen forming those patterns below, but we still need to wait for those patterns to form. So as I said before, this is only a projection. If the market decides to print those patterns, then we will react or we will stay away. We are not forced to trade just because those patterns are printed. We need to observe the market conditions, the market environment, the sentiment, the price structure, the major higher time frame price structure is also convenient to pay attention to as soon as the market starts to approach those levels. So, and if it makes sense, we can try to create a situation there to get involved. Aussie versus, or actually Australian dollar versus the yen, also printing kind of a technical double bottom right there. Let's see if the market will confirm that pattern, trading above the most recent resistance level, but we are also trading very close to the bullish shark pattern projected before at 72.93 to 24% Fibonacci extension. If formed, we will expect the 38-50% Fibonacci retracement to be reached, also with the 200 moving average approaching from above. Let's see if the market will form the pattern and then if it will search for that moving average. Obviously, a validation of this technical double bottom, it will increase the probabilities for more upside momentum, and we will ignore these. We need to adapt, and we need to ignore this potential shark pattern projected below. New Zealand versus the yen, tricky one. the pattern that I want to share with you is that head and shoulders formation above, so that may put the price trading the 65.48. Before that happens, I believe if the market decides to trade below that weekly fractal, I believe we may see the price feel some pressure at 67.49. So this is the bullish scrap pattern projected at 168 extension. If that happens, it may create some bounce from here. As I said before, the crab pattern will trade the 38% fib. It will target the 38% Fibonacci retracement level, and as you can see, let's say a violation of this weekly fractal support and the formation of the pattern will later suggest a retest or a visit to this broken support. So let's say we wait for the pattern to form. We have also the 38 major Fibonacci retracement level right below the pattern completion point. So let's not ignore this range. So, and if the pattern forms, we will expect a bounce targeting the weekly fractal support. The Canadian dollar versus the yen also shared this as a potential bullish alt bat pattern. In fact, I projected this as a bat pattern at 88% fib. For those who are familiar with that pattern, we already know we have also the 113% Fibonacci extension as a let's say hunting those stops positioned right below the starting point of the pattern. So there will be a lot of people buying the market as soon as the market approaches that weekly fractal, with stops positioned right below, tiny stops, and the 113% Fibonacci extension. We should pay attention to that extension level because it may act as a hunter price zone or a hunter box for those bulls who have entered the market earlier with stops right there, right below their entry. So that being said, we can see this as a potential inverted heads and shoulders. We are now threatening the validation of that pattern, which may put the price trading very close to the 50% Fibonacci retracement level. So those two green boxes, the projection for the pattern right there below the 50% fib. We have also the 200 moving average approaching from above. Let's see if the market will also search for that moving average. But again, we are already trading very close to the 38% fib after a bounce from the 113% Fibonacci extension. So let's stay tuned to that possibility for the Canadian dollar versus the yen. I'm not sure, I need to confirm if I shared this pattern on my previous video from the 113% fib. I remember that I shared the pattern from the 88% Fibonacci retracement level, but I'm not sure. I need to confirm if I shared this alt bat pattern on my previous video. Euro versus the New Zealand. The only thing that I can see here is this minor, let's call this minor heads and shoulders above this trend line support. So there's an ascending trend line support, and the market has decided to violate and to break below that trend line. So we have a retest of that trend line support already. This may act as a double bottom. Eventually it may act as a double bottom, but we still need to confirm that pattern trading above the most recent highs, the previous structure highs, the next zone. So if the price decides to confirm that, we may see more upside momentum for the pair. And we have also, if that happens, we have also a bat pattern projected right above. So this is a so-called M shape, or in this case the inverted, but the W shape pattern. So the 88% fib, if that double bottom confirms, we can start to project that pattern above the previous structure highs and the 88% fib below the daily fractal resistance. Again, let's not ignore the invalidation. Not the invalidation because the pattern is not valid yet, so we need actually the price to trade above these highs, as I said before. But let's not be surprised with more downside momentum, and if that happens, I will pay attention to this first level, the golden Fibonacci extension 173.13, very close to the default target for the heads and shoulders printed above. So this is the default target for the heads and shoulders, and we have a cluster box, let's call this a cluster box, between the pattern completion point and the default projection for the heads and shoulders. So euro versus Australian dollar. Actually, at this point, a lot of things can happen from here. One of the patterns that I projected was the BAT pattern at 88% Fibonacci retracement level. So if the market decides to respect this 200 moving average approaching from below as element of support, so if the market decides to respect that moving average, we may see more upside momentum and trading above. And again, we need to wait for the market to trade above this daily fractal resistance. As soon as that happens, we start to project that bearish BAT pattern above. In terms of symmetries, we have this eventual kind of an ABCD pattern symmetrical projection, throwing the price at 163.21. So if the market decides to sink, actually we have also Fibonacci retracement here. Let's use all those levels. So we have the most recent support, actually the previous and daily support at the 50%. We have then the most recent one at 38% Fib. So let's see if the price breaks below those levels. As soon as the price starts to violate the 38, it will target the 50%, and then if the market decides to trade below that daily fractal, we may see more downside momentum. We have also one ascending trend line approaching or covering those previous structure lows. So let's see if the market will actually decide to break those lows or that structure trend line support. Euro versus the pound. As I said before, I don't care what will happen inside this structure. There is a lot of noise here. Not the best pair to trade at this point, on my opinion. I don't know what to do. I wait for those patterns to form below. If the market decides to sink, as I said before, I will pay attention to this price zone. If not, I will completely ignore this nervous euro versus the pound. Not the very best and not the clear chart at all. Reversing with the pound versus the Australian dollar, which is very clear, which has produced a very clear ascending structure. So we're still trading inside this channel. I will not be surprised to see this as a potential triangle there, but we still need to wait. I believe the market may feel some pressure as soon as it approaches this trend line support, approaching from below. So if the market decides to respect this 200 moving average again, it may produce new highs, eventually new structure highs. But if the market decides to violate this daily fractal, I started to project this crab pattern at 180.44. So, but again, I need to wait for that to happen. Nothing is granted. This may act also as an eventual, let's say, a cup and handle. Let me try to show you this. I will not be surprised to see this as a cup and handle formation. So we are actually forming the handle. And obviously we need to confirm that pattern above the weekly fractal resistance. As soon as the price breaks above, we start to project and to identify the default projections for that cup and handle. But if the market decides to sink, I will pay attention to 180.44, which is the default bullish crab pattern completion point. The cable versus the New Zealand. Tricky one also, not so clear. I have also another projection to share with you here. So we have false breakout above, eventual false breakout below should be guide us into an extension level, and I will search for the 161.224. So basically we have this minor potential bullish shark pattern projected at 168 extension, the daily fractal support. If the market decides to trade below that daily fractal, we have also a few points below the second level for the shark, but if the market decides to violate this structure, I believe the market will actually sink into it will retest, at least in my opinion, I believe the market will retest the previous structure support, the weekly fractal below. Obviously that is not granted, it's just pure speculation. As I used to say, I don't trade speculations, I trade the patterns once formed. But well, we are free to speculate, and I believe if the market decides to break this fractal, I believe there's more room to see the cable versus the New Zealand, or the pound versus the New Zealand trading even lower. So we have also those major shark patterns projected at the weekly fractal and below the monthly fractal, between the 161 to 24. So the first level will be 190.66, so the weekly fractal. Let's see how it will develop. Now let's go into the Dixie. The Dixie has formed already the bearish cipher pattern at 94.25, so we can expect, so we create an expectation based on historical data, and the bearish cipher pattern tends to search for the 38% Fibonacci retracement level. So that level is now projected below the most recent fractal support, the 93.59. Obviously, trading above the weekly resistance will invalidate the pattern. So, but let's assume, and taking into consideration the bearish cipher pattern completed or formed, we assume the market will retrace back to the 38% Fib minimum. So we have also a second target at the golden Fibonacci retracement, which we pay attention as soon as the price decides to violate or actually to move in that direction. Now, gold, eventual bearish shark patterns projected between 1900 and 1915. So basically we have the 161 and 224% Fibonacci extension levels. Obviously the very first one, 161, 200 moving average approaching from above. Let's see if the market will find some pressure there. More downside momentum is expected for the pressures. Let's see what will happen. The silver, nothing very specific at this point. We have a new fractal resistance right there. We have this trend line resistance also approaching from above, and we can start to project the same thing that I have done with the gold. I can start to project these sharp patterns above. So we can see the market has found some pressure at the golden Fibonacci extension level. So basically we are seeing the bearish shark pattern printed on silver, the golden Fibonacci extension level right there, trend line resistance. So we should not ignore the eventual retracement back to the 50%. So, but as I said before, by default the shark pattern will search for the 50% Fib. We can use the 38% Fibonacci retracement as a guideline also, or as a target. So let's see how it will develop from here. More upside momentum, and we have also the shark pattern projected at 224 as a last resource for the bears. If the market decides to trade above those levels, I believe the market will retest these daily and weekly fractals above. The first level has been reached already, the 168 extension. So let's stay tuned to this silver chart and the eventual retracement back to the 38% Fib. Now I need to increase my time frame because the market has failed some of the patterns that I was expected at this price zone before last week. And basically this is kind of a shark pattern projected at 168 extension. Let me show you this level. So this is an extension between these lows and the previous structure highs. So the very last swing low projected at 168 extension. So I projected that shark pattern before the completion point. The market has formed the pattern, but then it has entered into this it has formed this huge consolidation and moving sideways process, ascending structure, new higher highs, and then suddenly the market has decided to violate that structure. So we are now threatening the formation of this ascending channel, this descending channel. We are now threatening the support trend line of that channel, but the default target for that shark pattern, again, the 50% fib 27.32, but we have also the 31.15 as a potential element of support, and a Fibonacci level, the 38% Fibonacci retracement level, I'm sorry. Now, S&P 500, 4 hours time frame chart, we have also shark patterns projected above, not granted, pure speculation. Let's see if the market will decide to bounce. I'm projecting those patterns based on or supported by this false breakout below. If we need to trade above these structure highs in order to confirm that false breakout, and if that happens, we may see the formation of those patterns above. The first level, as I said before, 161, 34.10, and then ultimately a push to the 224, 34.77, the last resource for the shark pattern to work for the bears. And as I said before or earlier, if the market decides to trade above that 224% fib, I believe the market will trade even higher. For now, nothing is formed. We have just a potential false breakout below, which needs to be confirmed above 33.43. Let me tag these highs for you. So 33.42. So this is our previous structure highs, previous structure resistance, and if the market decides to trade above, it will increase the probabilities to trade and to form those patterns above. I shared these DAX already. On a higher time frame, the market has decided to find support at the golden Fibonacci extension right there, forming this bullish crab pattern at 11.43. So basically we are now threatening a bounce from this price zone with default targets around 12.141. So this is a 38% Fibonacci retracement level. I will not be surprised to see the DAX being pushed to those levels, taking into consideration the bullish crab pattern completion point and the historical data presented for that same pattern. So that being said, let's wait for a reaction from this price zone for the DAX. The market is already reacting well from that price zone. Let's see if the market will achieve those default targets or the default expectations. So this concludes my presentation today. I will finish just with the Bitcoin and with the Ethereum. Bitcoin has formed this bearish crab pattern projected before to 168 extension 1410. That was my projection for the crab pattern, and I will not be surprised to see a retest or a visit of that weekly fractal resistance, which may act as a support. So basically the broken highs, broken previous structure highs, previous structure resistance, and weekly fractal being acting as a support again. So let's see if that happens. The fractal is now positioned at 12.47. So if that happens, I believe the market may find some pressure there. Ethereum, nothing very specific. We have kind of let me show you this as a potential parallel structure here. Actually not so, but we have a structure support trend line. Let's call it. It's better to use this as a structure support. Obviously trading below that trend line support will increase the probabilities for more downside momentum, but we still have this bearish bat pattern projected above at 468. So basically I prefer to wait for that, or we can wait for a violation of this structure, which may put the price trading again the daily and weekly fractal above the monthly resistance. So we have a monthly fractal resistance which may act as a support. I will not be surprised to see a retest of that level, but trading below this ascending trend line support, I believe the market may fall into the previous structure lows, the most recent ones, and eventually a retest of that monthly fractal. So only 34 minutes today. It's kind of a record for me. I used to record these videos and to share those videos with more than 1 hour most of the time. So this was kind of a record for me. I hope you enjoyed this video. Let's see if those patterns will form. Stay disciplined, and well, it was a pleasure being here once again. I hope you enjoy. And see you next time. Have a nice week.